claiming the input tax credit. That is the transitional credit. TRAN 2 is for those cases where you don't have duty paid document or you have only VAT invoice, and for those cases you need to declare in TRAN 1 that so much of stock is with you on which you don't have duty paid document or you have only VAT invoice. Those stock needs to be sold within 6 months from the appointed date. That is from 1st July, August, September, October, November, December. By 6 months you have to sell these stocks, and whatever tax you have paid, CGST, SGST, 40% or 60% you can claim as the input after filing the TRAN 2. First file TRAN 1 and then TRAN 2, so that provisions are there. There only many people have missed it. Many have filed the TRAN 1 form. TRAN 2 they have forgotten. Or they have filed the TRAN 1 form. The sales data or the stock data what they mentioned in TRAN 1 is not matching with the TRAN 2. See, the main issue with the TRAN 1 and TRAN 2 is, first you need to give the details of stock in hand as on 30th June, and this stock should be sold from July to December. That stock sold data should be mentioned in the TRAN 2 form, and based on the rate of tax, say for example your product rate is 18% or more, then 60% of the ITC of the tax paid you can claim, or if your product is less than 18%, then you can claim 40% of the tax, subject to condition that the tax is being transferred to the sale, that is transferred to your recipient by way of reduction in price. So one issue where many people have missed out is matching of the stock. When you ask your client, you are given transactional form 1, TRAN 1 form, yes, you are given stock, yes, you give me what is the date of sale, invoice wise breakup. If stock is 1 means okay, but multiple stock, it's a big challenge. So there you need to ensure that whatever stock shown in TRAN 1 and whatever is shown in TRAN 2 related invoice, those should match. So one issue where TRAN 1, TRAN 2, you need to be careful. Any doubt in this TRAN 1, TRAN 2? Capital goods. So that will come separate next part. Because I thought one issue which was major TRAN 1, TRAN 2, capital goods I am going to come in the next part. Any other relating to TRAN 1, TRAN 2, particular to this 40-60%. Okay. So eligibility is only migrated dealers are eligible to claim the ITC. Again, migration was a big challenge. One of my case, what has happened is, we did not migrate, but the officer has sent the user ID and password. So since we received an email from our client, we have received the GST number, we thought that provisional registration is complete and we have given the GST number to the client. We were under the impression that they have completed the work. They were under the impression that we have completed the work. And we have been issuing the GST number everywhere for almost a year. Yes, more than 9 months. And for 9 months, we have been telling them, please send your return filing details. Already penalty is piled up, or your number will be cancelled. Okay, sir, we will send. We know our client how they deal. Okay, sir, we will send. 9 months over. July 2018, we received the data for filing the return for July 2017. Login, no user ID, no password. Ask the client, sir, you did. We say they did. So then what happened? Total input tax credit gone. We went to the department and requested them to reactivate the number. Since 31st December 2017 was the last date for all the mistakes, amendment problem, you can go to the department and reactivate your provisional registration. That has also been over. We did not have a choice but to forego that input tax credit. So this is one issue you have to be careful. If you have migrated some of your client, please check your login. Second thing is, Many dealers who have not filed the return, few departments have cancelled the number. Few have not cancelled the number. So please check that part also. And another problem at the time of migration is few cases, in case of individual HUF PAN is given, in case of partnership firm, partner PAN is given. So these kind of confusion has happened. So I would request that please check your registration details, what you have done at the time of migration, once again to ensure that address details, everything is corrected, because at that point of time, whatever work has been done, we have done and completed to ensure that everything is done. But in case, say for example, one case what happened was, where address, place of business, instead of providing the address of the business, the address of the partner has been provided. So another one example I will tell you. One client made a call, sir, we have received a notice from GST department that 2A is not matching. I said, you file the return and check. Sir, I have not migrated at all. I said, not migrated, what have you done? No sir, I have received a letter, I have not migrated 2 months back. Okay, you do one thing, go to that department, you don't know the user ID password, write a letter, get the user ID and password. So we went to the department, took the user ID and password. From July till September, he doesn't know that he has been migrated, but we have got what? User ID and password. He has logged into the user ID and password. Monthly 5 crores turnover. Monthly 5 crores turnover, exact amount of input with little input carry forward. Someone has misused his PAN number to issue these invoices. So immediately I said, you file one police complaint, write a letter to department, because no ITC, the person issuing bill, see, 3B is a dangerous form. Any amount of ITC you get provisionally. So immediately write this and then you follow up. So that big issue is going on. So please check wherever you have migrated, numbers not taken, or at least one log in and see what it is, whether it is active, not active, because any one case means then gone. So just going through the section 139 is related to migration of the existing dealers to the GST dealers. That provision is section 139. Then comes to section 140. 140 deals with the transactional credit eligibility. Now I'll take this session and what are the issues at that point we will discuss, and so that automatically it gets covered rather than taking issues one by one. So first is, I said the first category of transitional credit, what you can claim is whatever input tax credit available in your return that you can claim in TRAN 1 of your central excise, VAT and service tax. But here, in case of VAT, there is one issue. Can anyone tell me what is the issue? When you claim the VAT carry forward, what is that which is important to be checked? CST. In case of claiming VAT input tax credit, what they have said is, if you have a VAT carry forward, that is in your VAT returns, you have a carry forward of tax to the migration, then you have to give two lists. One is the list of C form received. Another is the list of C form not received. And for those C form which is not received, you have to calculate the tax and then reduce it from the VAT carry forward, and then only you have to claim. So here please check whether C forms have been issued correctly or assessment has been done or not. Value, if it is mismatched, then you need to do a reversal and pay interest accordingly. If you do it, only interest. If they do it, interest plus penalty. So this C form part, please check for your clients whether they have done it correctly or not. We have many clients at that point of time Normally our clients come in the end moment. We don't check whether C form is there or not. Then the officer is calling, you have a C form sale. Why you have not mentioned? C form and F form, that is branch transfer form is form F, and C form is for interstate sale. So there you need to check whether the details have been provided correctly or not, or if the details have been provided correctly, you have given all the C form number, later on assessment is done. Possible? CST department is calling for completion of the CST assessment. Some forms are found out to be invalid. Possible? Some forms of, say, I have input tax credit carry forward of 10 lakh rupees. I have given all the C forms. Now the officer is doing my assessment. During the assessment, he finds that around 1 lakh worth tax I have to pay because of the wrong claim. So then you need to reverse it. So there you need to check. So 3 returns: central excise, VAT and service tax return. Whatever is the carry forward that you have already taken in the TRAN one, but ensure that the value is correct. Some places, some people have made very minor mistake, only 10 extra they have put. So these cases have been occurred. So while filing the TRAN credit, and many places department have also issued notice. Here in one case, entry tax. See, entry tax, you file in the return and then the carry forward is happening. But now department has started issuing letters where entry tax is there, saying that you cannot claim entry tax in the TRAN one. So if you have not filled in the return and then carry forward is there, that is, if you have filled in the return and carry forward is there, then okay. If you have not shown in the return, then you cannot claim. That is one issue which we are facing. Second issue is, in case of VAT, where TDS is deducted on VAT. TDS is deducted on VAT. Now here 2 things are there, 2 options are possible. One is, if TDS is deducted and you have claimed in your return and then there is a carry forward, then you are eligible to claim. Understood? If TDS is deducted before 30th June, you have claimed in the return and then the carry forward is there, then you can claim. TDS deducted, 30th June return filed, but not shown in return. And you have added in the transitional form. Can you claim it? We are receiving notice for that also. Because as per nowhere TDS is there, they say that separately you have to apply for the TDS refund. You cannot claim in the TRAN 1 form. So that one thing, TDS and entry tax, you need to take care. Then not eligible. Now many places not eligible as there, section, subsection 1, 2, 3, 4. I just listed out the few important points rather than giving the whole text. You need to check while doing your audit. Already statutory audit is there. This should have been done while doing statutory audit. But we know no, even form WW, post operation only, post completion of tax audit we do, and there will be turnover difference also. But there no way linking is there between the VAT department and the income tax department. So any mismatch is there. So it is not creating much of a trouble. But in GST it is totally different. Everything is linked. Your GST is PAN based number. Your income tax is PAN based number. Once you file your TRAN 9C or 9, automatically they will compare. It is only just some codes, compare this value with this value. And then it is a computer, please note. It is not manual. With some difference, okay, they will say, okay, less than 1,000 or less than 10,000, you can ignore. So this computer generated notices are very dangerous. Everyone has the habit of checking WhatsApp daily, every second, every hour. Whether you are checking WhatsApp or not, check the email. Department is issuing notice, giving 7 days time. Within 7 days time you don't appear. One option they are giving and then they are cancelling the number. Certain cases we went within 7 days. He is strictly telling, sir, I'll give you 15 days maximum. If you file the return, it is okay. Otherwise, we are going to cancel it. So be careful. Nowadays, online notices have much importance. If you missed out or miss it out, then go on. And another issue is we don't have control, correct? Our client is having the email. So, or we need to check every time before filing the return. There is a tab, notice tab, one tab is there. In that notice, whether any notice is issued or not issued, we need to have and have it regular whenever you file your monthly return. Tell your staff or yourself that first point, check in notice, any notice is there or not. So what habit is? Automatically that it becomes a habit. Anyway, once in a month you are going to file the return. So automatically you can check all these notices. So that is one part. Okay, now TRAN credit on what you are not eligible. Now, there are certain goods which are exempted, or certain goods on which input tax credit is not available in the present act, but you have input tax credit in the earlier act. Those goods ITC you cannot claim. That is credit available in the earlier regime, but in GST it is not available, then you cannot claim the ITC. And you should have filed the return for the last 6 months. In case of central excise, in case of VAT, last 6 months return should have been filed. If it is filed only for 2 months, 3 months, then transitional credit you are not eligible to claim. Say out of 6 months only first 2 months is filed and last 2 months is filed. In between 2 months it is not filed, then go on. If departments find that you have not filed this, those who have filed a manual return, in VAT we had the option to file a manual return, correct? So certain cases, if you are unable to file, we give the manual return after the return filing date also. There you please note that you have the proper attestation or whatever submission report, and then keep it accordingly. Credit on goods manufactured and cleared under exemption notification. So you manufacture certain goods and it is cleared under exemption notification. On that you may have the ITC credit, but you are not eligible to claim the ITC credit. And then these sections are not applicable for section 10, that is composition levy dealer. Now we come to any doubt till now? Yeah.
Regarding C-form non-submission, what if a client says all the C-forms are there and they file a TRAN 1 report, and later on there is an assessment and you said that on the assessment let's assume few C-forms are not submitted and they are putting a penalty, all these things. Now should I forgo the credit as well as in paper in the assessment, as I have to pay the money, and as well as I have to reduce the credit from my TRAN 1?
Reverse the credit.
Okay, that means
No, you are not paying here.
No, let's assume I'm paying in the assessment.
You have to reverse the credit.
That means for one single mistake you will punish me 2 times.
No.
Because I'm paying the money here and right away you're reducing my credit.
You have to reduce the credit. You don't need to have to pay. But department is always taking the safer side.
Yeah, so if in
that we need to go for appeal and then only we can do it. Okay. Actual procedure is reversal only. Why? You are claiming excess credit, correct? Okay. See, what is the rule? Whenever you claim in excess, you have to reverse, and for the period you have to pay that interest.
So what about the interest in the assessment? They will ask some interest and penalty, right?
You have to pay interest they will ask.
That means
penalty they will ask.
So technically for one mistake I'm punished 2 times. One time in the...
No, tax is anyway you have to claim reverse only one time. But department, they don't know what to do. These issues were there. Earlier in e-way bill this problem was there. One vehicle number, that is when the e-way bill started, next day in Kerala, one vehicle was caught. One vehicle number wrongly he has typed. He had to pay 70,000 rupees, 35,000 tax plus 35,000 penalty. Now, in VAT, whenever the vehicle is caught, you pay advance tax. Correct? Can you claim it? Yes, you can claim in filing the return. In GST you cannot. Because if you see that section, I don't remember the section, he is asking you to pay what? Check. He is asking you to pay, whenever a vehicle is caught, he is asking you to pay a check which you are giving it to the department. Now, in GST, when any amount comes into your cash ledger, then only you can adjust against your output, correct? Any amount you pay to the department, directly, indirectly, whatever it is, only when it comes to the electronic cash ledger, then only you can adjust against the output liability. Here I have paid 70,000. While filing the return, again 35,000 tax I have paid, and then we are going on appeal for that purpose. So it's very little tricky on whenever a vehicle is caught. Certain cases now, if the officer is accepting you to make the payment online in the electronic cash ledger, I'll tell better pay off. That is an advantage for you. Certain cases, the officer has accepted to make the payment in the online, but in Kerala at that point of time, they demanded only check.
And one more doubt, sir. What is the constitutional validity of the email notices, sir? For example, we are receiving from email from Gmail server, the same circle creates a Gmail ID and sends the email. Is it constitutionally valid or?
In Act, you have said no. Way of notification, communication by email. So validity is there.
So from any
now,
mail,
whose email? No. Any mail that.
for example, individual circles are creating their own email IDs from Gmail and they're sending up without any signature or nothing, just an attachment.
Sir, you are telling at least signature. To whom it is sent, that is not mentioned. One common notice.
Yeah. They're including every.
Common notice. You have did so and so transaction. You tell no. I am looking which client it is.
So it is valid. That means the notice is served on me.
But now then we need to fight. That is a issue.
Okay.
So if he says, sir, to whom you have sent, I don't know. I am looking after 100 clients. If it is client means, then okay, we can understand. But name, they are given a common control C, control V. At least a mail merge and do it, they don't know what is mail merge. What to do? Department is department.
Last 6 months filing of return, if the registration period itself is less than 6 months,
Then okay. Then it's okay. See, that last 6 months is condition where more than 6 months registration. If 2 months old means, then that 2 months return has to be filed. If due date is not there, within the due date, you have to file. Like service tax, after July, I think August, September, some 31st October was last date you need to file that quarterly return for the 3 months. Then coming to capital goods. Now capital goods, central excise, capital goods, you can avail input tax credit. Even in VAT, you can avail input tax credit, but not for everyone. It was only for the manufacturers on particular asset. Now, input tax credit on the capital goods, how we used to claim. First 50%, that is whatever ITC on the capital goods, first 50% I claim in the return during the year I can claim. Balance 50% of ITC I can claim in the future. Yes. Now before 30th June, I might have purchased many assets, either in VAT or central excise. Here two scenarios. First scenario is whatever asset is there, first 50% I have claimed in the previous year before 30th June, and balance 50% also I have claimed. That means nothing is unavailed. Nothing is unavailed. The asset is more than 1 year. First 50% of ITC claimed in the previous year. Balance 50% of ITC claimed in the current year. Automatically whatever is my credit, that will be reflected in my, if it is a carry forward, in my closing return. That is what is ITC carry forward. Now second type is what the credit we can avail. In case of capital goods, unavailed SENVAT credit not carry forward in return. Say for example, you have purchased an asset of 10 lakh rupees. Input tax excise, say for example, 12.5%, that is 1,25,000. So first 50% you have claimed, say in April 2017. So 12,500 means 62,500 rupees I have already claimed, or I might have claimed 30,000 also, or I might have claimed 40,000 also, but 50% I have claimed before 30th June. What about the balance 62,500? It is there lying in my books of account, but it is not reflected in the return. This ITC which is not availed in my return, that credit I can claim in the TRAN 1 form. Is it clear? Any doubt? Yeah.
Even if we have availed depreciation under Income Tax Act, then also can we claim?
So for capital goods, no dual SIM, single SIM. That means two benefit you cannot claim. Depreciation on the asset or tax. See, many people are getting confused. They say that if you are claiming ITC on the capital goods, you cannot claim the depreciation. On what? Whether on ITC or the cost of the asset. There are two things. What you cannot claim? ITC. You have the right to claim depreciation on the cost of asset, but what the law is talking is only on the ITC. Either you claim the ITC or you add the ITC with the cost of the asset, then you don't claim the. What we people do, if they don't give this provision, you add there also, here also. So they have cleared it. It's only accounting and playing with the accounts. So they have clearly said that this, because otherwise this issue will crop up. Like same way, motor vehicle, section 17, subsection 5, you cannot claim ITC on the motor vehicle, correct? So, okay, motor vehicle you cannot claim. What about repairs? What about insurance? Not all the motor vehicles, there are three conditions. If it is for the transportation purpose, transportation of goods or learning, further selling, that is exempted. And what I am telling is about a car. There is no specific provision in the Act where they are stopping you from claiming input tax credit on motor vehicle repairs. Is there any provision? So everyone what they did? Repairs, we claim the input tax credit. Insurance is there, we are claiming. Repairs, tires, buying, whatever repair is there, we are claiming. So now department found out this is the issue. Recent amendment has come in September. Amendment in the Act. If you read section 17.5, latest amendment, it is not yet notified. They have specifically included repairs, insurance and all those things. Certain places some improvement also has been made in the amendment. So those who are doing CGST, that is GST, or those who are planning to go to the next level, it is not like income tax. GST is not like a income tax where you read the Income Tax Act and then complete it off. Here, changes are many. You have to be updated. What I am telling today, I don't guarantee it will be there tomorrow. This is what I used to tell earlier, at least now the amendments have come. More than 500 notifications have been issued. Tracking that notification itself is a tough job. So what is important, what is not important? First is the Act, 4 Acts, CGST, SGST, IGST. Then there are rules. Then there is notification. Then there is circular. Then there is order. But people are confused with press release. Many people have said, sir, composition dealer 1.5 crores are increase pantanga. Where did you see? Press release. Is a press release document? So, whatever change is there, ensure that proper notification number is there. Otherwise, one small mistake can cost you a lot. GST, the challenge only is notification. Updated of the notification. Luckily, after September, I don't think many notifications have issued. We are in October, November. Last came in September only, I think. But again, notification, CGST, SGST, Control C, Control V. IGST, some notifications will come. Then UTGST, very minimal. Again, another confusion, two types of notification are there. CGST, tax notification, CGST, rate notification. Tax notification related to the Act. CT in the bracket R is related to the rate. So, how many notifications you need to see? CGST, CGST tax, CGST rate. So 2. Same way in IGST, same way in SGST, same way in UTGST. Sometimes we get confused whether it is in rate or where did I see, whether it is tax. So even Excel table is prepared and then someone has prepared and sent, very beautifully done. Tracking big. So we are, what I do is, I normally, what is important, not important. From last more than 1 year, many are only extension. Date extended. So what few importance is there? So this is regarding capital goods. One more thing is credit not admissible. Now in case of capital goods, unavailed input tax credit on the capital goods. Earlier law, credit is not available, then in current law also not available. Earlier law available, current law not available, then not available. Earlier law also input tax credit should be available. This law also input tax credit should be available. Then only you are eligible to claim that. Yeah.
Sorry sir, final doubt.
Yeah.
Yes, sir. For example, I have a scenario where my client need to claim a refund of the SENVAT credit due to export. But he has not claimed the refund in the SENVAT Act. He has moved the credit to the GST TRAN.
How we can move?
It was lying in the SENVAT returns as unutilized credit, carry forward credit.
If it is in the return, then okay.
Okay, but it was subject to a refund in the SOL Act.
Did you apply for refund also?
No, we never applied for a refund.
Subject to refund.
Yeah.
But you are utilizing that credit. We need to check that.
Minimally we were utilizing the credit. Most of the things were there.
But if it is eligible credit,
yeah,
see that here also in GST, you have an, in case of exporter, if you have input tax credit, either you claim refund, or if you have a domestic sale, adjust it against the output sale. So same case.
So
I
if
don't
not
think.
adjusted, it will be lying, and I can move
Yeah.
it. And that cannot be a question against that, right?
If you are applied for refund, then there is a question.
But I never applied for the refund, but there is still a question why you're carrying forwarding so much of credit and you don't have that.
That we need to check whether your eligible credit is there or not. If it is eligible, then you can carry forward.
Okay.
That eligibility you need to check. Any other doubt? Then other eligible person. Now, if you see registration, existing registration, some of them are registered in VAT. Some of the dealers are registered in service tax. Some of the dealers are registered in central excise. Some are registered in all the three. Or some are registered in two only. So, they have very clearly said, person not liable to be registered under existing law. This is subsection, I think 3 or 4 in section 140. Person not liable to be registered under the existing law. That means I am a VAT registered dealer, but I am not liable to register under central excise. Understood? Yes. So, person not liable to be registered under the existing law. In case of trader, I am not liable to register under the central excise. So, in this or engage in manufacture of exempted goods. I am a manufacturer, but manufacturing what? Exempted goods, or exempted service, or works contract service, or first stage dealer, second stage dealer, or registered importer, or a depot of manufacturer. Now, what is common in all these items is, except for the first part, person not liable to be registered under the existing law, most of the next 4 parts, they get an invoice with the duty paid document. First stage dealer, he will get an excise dealer, excise invoice. Importer, he will get a customs invoice. Or depot manufacturer, again he will have a central excise input, except in the exempted goods. But person not liable to be registered under existing law, that is, I am VAT registered, not liable to register in central excise, I may have 2 types of invoice. One, only VAT invoice. Second, central excise invoice, but I am not eligible to claim the input. Where I have central excise invoice, and I am registered under that, that means what? I am having a duty paid document. So that duty paid document, some duty is given, that I can claim it as a in my, provided that stock is there in your hand and it is within 12 months. So central excise, where you can claim input in your electronic credit ledger. Central excise, which head you can claim input? CGST. Service tax, VAT, SGST. Another thing what you will check is inter adjustment is there, CGST input, SGST output. So adjustment of tax, brothers will always fight, so they don't share, that is CGST cannot be adjusted against SGST, SGST cannot be adjusted against CGST. Specific this transitional credit input, you cannot adjust against the state, that is CGST can be adjusted only against the CGST. What transitional credit you have claimed, if it is under CGST, you can claim only under CGST. You cannot claim under IGST. Same way, if you have claimed VAT input tax credit, you can adjust only against SGST. You cannot adjust against IGST. Anyway, system will not allow you, that control is there, so I don't think that will be a big issue at the time of filing the return. So for this person, as on 30th June 2017, you have inputs or finished goods or semi-finished goods. So these goods, they can claim the input tax credit based on the duty paid document what they have. For VAT registered dealer, duty paid document is if he is having a central invoice, central excise invoice. For importer, he is having the bill of what is it? When you import, you get a bill of entry or bill of entry. Yeah, that document is there. Now coming to this, engage in manufacture of exempted goods or exempted services or works contract. Now I am a manufacturer of exempted goods. I am manufacturer of exempted goods under excise. Now I am migrating to GST. In that, the goods become taxable. Possible? Yes. I am a manufacturer of exempted goods, and because of migration and GST law, this product becomes taxable. I have on 30th June inputs, semi-finished goods, finished goods, but since I was not eligible to claim input tax credit in the erstwhile law, can I claim in GST? Is the question clear? I am manufacturing exempted goods in the central excise, but in GST it becomes taxable. I have certain goods in my hand, stock, which is used for the purpose of making taxable supply. For these stock, I have invoices, duty paid documents, right? Can I claim input tax credit? Yes, you can claim. If you have exempted and now the product is taxable, whatever stock in hand you have, on that if you have duty paid documents, based on the duty paid documents, you can claim the VAT credit in the transitional form. So this area you need to be little careful whether he has done it correctly or not, because see what is the issue here is stock in hand and invoice will not be same. You might have purchased 100 units, but stock in hand 30 units. What client will do? He will give ITC for 100 units. So be careful there. Whatever stock in hand is there, proportionately what is the ITC, that alone you need to claim it. And another thing here is that in case of other eligible person, in case of VAT or any other person who does not have a duty paid document, I have stock in hand, but I don't have duty paid document, then what comes into picture? Can he claim the input tax credit? Yes, he can claim. If duty paid document is not available, then he can claim the input tax credit, but not on the face of it. That is, immediately he will not get. First, in the TRAN 1 form, he has to fill the list of stock on which duty paid document is not available. Second condition is, this stock should be sold within 6 months from the appointed date, and then you need to file TRAN 2 return, and then in that you need to claim the transitional credit. Subject to one condition, that whatever tax claim you are making on this, you have to reduce the price and give it to your customer. Say 100 rupees is the sale value. I am taking the benefit of 6 rupees. My sale should be in the 96 rupees. Today nothing will happen. No one is going to see. Only after 3 years you will know the impact of all these things. Because wherever they are looking at the big value figures, and then maybe first or second year they may be certain lenient, but if the impact is not there, they may or may not. So this part is very important, because this is actually anti-profiting laws are there. So based on that, this condition is available. And for this talk, there are certain conditions. First is that this good should be used for the purpose of making a taxable supply, and then said registered person is eligible on ITC or such as the ITC on the CGST Act. He should have a invoice. Now to claim the full, ITC on the tax paid document, you should have a tax paid document. If you don't have a tax paid document, then what happens? You can claim 40/60. And invoice or document should not be more than 12 months. Invoice or document should not be more than, so I have stock in hand but no invoice. Then 60/40 you can claim. And no abatement under this act. Past benefit, okay. Okay, this already I have completed manufacture of taxable and exempted goods. That is, some goods taxable, some goods exempted, both I manufacture. For the taxable goods, I have already claimed the SENVAT credit, but for the exempted goods, there are certain goods or stock in hand which I have. So on that goods, I can claim the ITC in the transitional form. But whatever it is, prepare a proper working. What I used to do is, wherever stocks are there, related invoice, one Xerox copy in the file with the working, one file I used to keep it. Prepare the working paper, because what I ate yesterday I don't remember. When I file the transitional credit form, at that point everything is completed, my work is over. Today I am getting notice, take that file and give it, that's it. So working papers are very important, reason being again technology. Today many of them are not taking printout of the 3B report. GSTR 9 you have seen, one table is there. Pona varsha tappu ella indha varsha tiddukkalam. That is, last year whatever mistakes you have made, you have adjusted from which month to which month? April to September during the current month. Unless and until you don't have a proper working paper, it will not be easy for you to find out. Working paper is there. Where? Excel. Where is Excel? Suresh Industries, Control F in my system, 200 files will open. So those who are preparing the return, please ensure that whatever working papers are there, take a printout, and where these kind of changes are there, that is previous month change made in this month, make a note on that return copy. Then only you will remember. Because not everyone sits and files the return. Even if you sit and file, at that point of time, you may be having 10 systems. Which system you have saved? You don't know. Then where you have saved? You don't know. Or if your staff is doing, he will not save the files correctly. So again, management of files in the system is again very important. I am facing this. Anyway, I have a proper track of control. Then too, certain issues crop up. When client is not maintaining the ledgers based on percentage in the books of account, consolidated, there are more bigger problem. GST 9C you see, reconciliation rate wise, gone. GST 9 you see, ITC services, inputs, capital goods. How many of you maintain? Correct? To get the data itself is a big challenge. So some accounting methodology you need to change. So I use Tally normally. In Tally I create inventory and then I maintain so that it gets. Same way ITC tracking in Tally, if you pass the monthly closing entry as per the 3B, then automatically your input output ledger becomes 0 and the proper tracking is done. So certain methodology in the accounting system itself, by passing some closing entries or control entries if you do, then only it will be easy. Otherwise what happens, every month we sit in the same problem, same system and carry forward. You get a data, correct? Client data in Tally, you are filing the return, you find 10 mistakes, sit half an hour, rectify all the mistakes and file the return. Next month what happens? Where did you make the mistakes, rectify the mistakes? In your Tally backup. Did you rectify in your client? No. Then next month what happens? Same problem will come. Same half an hour extra you are wasting it. So, some technology is big trouble, sir. If you are not updated, you are outdated. Earlier, once in a year, you used to get some mobile phone model or some change in version. Every now and then, Android, sandwich, burger, pizza. So every now and then updates are coming. So we have to be careful. One person in office who can take care of technology. So practically. And then centralized registration, service tax, we used to have centralized registration. Right? Balal Dev has come into picture. See SGST, trouble, 29 states, bank has to take 29 registration. Again various divisions, bullion division, banking division, credit card division. If they have, they can claim different registration, business vertical registration. So earlier we had centralized registration. In the centralized registration, when they migrate, they can claim that CENVAT credit and adjust it. That also option is given. And they should file the return within 3 months. So already that is covered in the service tax. So this is the rule for the 60/40. Already I have explained it. In the TRAN 2, within 6 months you have to file it. Please check whether TRAN 2 is filed or not. You may have declared a stock of 10 lakh. The sale with GP can be more, but it cannot be 20 lakhs. So track the TRAN 2 details declared in TRAN 1 stock and what is the detail filed in the TRAN 2. But luckily, TRAN 2 is picking the data from your TRAN 1. How many units are there, balance unit, automatically it is showing. So that way, little we are seeing. But value wise, you have to be careful. Value it is not picking. Say 10 numbers, it is okay. Value. So there one issue is there. Same for CGST and SGST, 40%. And eligible duty, what are the eligible duties? These are list of the eligible duties which is there in the Act. Now, certain inputs for goods or services in transit. So what they have said is, certain goods and services, they are in transit, that is, it is in between the 30th June post entry. Then what they are saying, within 30 days, you need to record it and then you can claim. So everywhere, whatever changes are being made within 30 days, you need to change it and then you can claim it. Person switching over from composition scheme to regular scheme. In earlier law, I was under composition scheme. Now I am in taxable scheme. So I have stocks in hand. Can I claim input tax credit? Same way, exempted becomes taxable. So even now, even today, if you are in composition dealer, that is section 10, you are registered and you are changing it to a regular dealer, whatever stock in hands, whatever tax is paid, when ITC form is there, you fill it and claim it. So that is also eligible. So please check whether your client was in composition scheme, what is the stock in hand, related documents are there or not. Now earlier big amounts, many people have received the notice from the department for verification. Few places they have rejected it and then we have reversed it. Nowhere demand is made. Few clients where we have received the notice from the department, they have asked to reverse in the next 6-7 months or whenever they are finding it off. Input service distributor, you are having a credit in the erstwhile input service distributor. So you can claim in the TRAN 1 and you can adjust it against your, even if the invoices is received after the appointed day also, that also you can claim subject to 30 days bracket. That is already this I have claimed centralized registration. Now what they are saying is in GST 180 days payment not paid, what we do? We reverse it ITC. And then we reclaim when the payment is made. But many of them are not doing it. Same earlier law, 3 months period was there. Before 30th June, I might have reversed because of non-payment. Possible? But after 30th June, I have made the payment. Then what happens? I become re-eligible to claim that ITC. So such ITC also I can claim. So category wise, while you have filed the TRAN 1, if you have put the breakup, then only it is VC. Now filling of GSTR 9. What is GSTR 9? What is Form WW? Form WW, whatever mistakes you have made, you can rectify. GSTR 9. Is it a mistake rectifying document? It is summary of returns. Nowhere you have the option to. Many people are still feeling, sir, annual return change panikalam. Any changes only in 3B, plus or minus in the turnover. Annual return, you don't have the option to make any changes. Somewhere some ITC difference is there, that's okay. Limited level. But otherwise, it is only summary of your 3B GSTR 1. So now what you need to prepare? Summary of 3B, summary of GSTR 1, then link it to the GSTR 9. So you are thinking that it's a big tough job. But luckily one PPT has come from the department about the GSTR 9 and we find that department is automatically taking the data from the returns 3B and pre-filling it with the option for you to edit. But you need to check because here issue will be there. One, turnover as per books. Second, turnover as per 3B. Third, turnover as per GSTR 1. So that comparison we need to check. So I prepared one Excel sheet and kept in, that is uploaded in CA Club India, where I prepared monthly summary of 3B in one sheet, monthly summary of 3B as per books in one sheet, monthly summary of GSTR 1, and then turnover comparison of GSTR 1, 3B and books, and then linking the turnover to the GSTR 9. If you want, you can just check it. So that will, at least, you will be able to find out where the difference is. So these are the section 140 transitional provisions for the credit. Any doubt till now? So reversals, please be careful. Many of them have claimed wrongly also. So there, if the department has asked to reverse it, then you will be liable to pay interest for so much period of utilized amount. But luckily, I don't find that department is asking to reverse. But nowhere they have questioned us to pay the interest. I don't know about their interest, whether they are interested or not. But anyway, when it comes for audit, after 3 years or 4 years, surely the demand is going to be reached. Now come to the job work. Now till now, whatever we have seen is carry forward in the return, stocks in hand, with duty paid document, without duty paid document, whether composition from taxable or exempted to taxable, those things we have seen. And now it is for job work. Now what is job work? What do you mean by job work? I am buying plywood, I am buying mica, I am buying screw, Fevicol, everything. Then I have a carpenter in my office who is my employee. Tell him the specification and he does the furniture. Is it a job work?
It's not an employee means okay.
So, what is job work is, if you read the definition in CGST Act, treatment or process done on another person goods. Very simple definition. Treatment or process done on another person. Same plywood, mica, ani, Fevicol, everything I am taking it, giving it to another person who is not an employee, and then giving the design, goods belong to me, processing is done on the goods by him, then only it is job work. I am doing a processing on my own goods, then it is not a job work. Please be clear, many people are getting confused here that I have a unit here, then I have a manufacturing unit in another place, I am sending my goods to the manufacturing unit, which is technically my branch or godown. Should I take ITC 04 or job work? Is it a job work? Whose godown is that? That is who's manufacturing? Your manufacturing. For whom you are manufacturing? Yourself. Treatment or process on whose goods? Own goods. Then it is not a job work. So be careful. Here in job work, what they are saying is before 30th June. Many people have the habit of sending the goods for job work. Every processing, they don't do it. So some goods which is finished for polishing or painting, they may send the goods for job work. And within a specified time, 6 months we had a time, it should come back. So what they are saying in job work is, as on the date of 30th June, before 6 months, that is March, April, May, June, July, so February, from 1st February to, it is from January to June, if you have sent any goods for the purpose of job work, that is your own raw material, sending for the purpose of processing and manufacturing to some other person, then within 6 months from the appointed date, you should get back after the processing or as it is. How many days? Within 6 months. And the commissioner has the power to extend it to another 2 months. Now commissioner has the power. How he is extending? By way of order. Understood? See, wherever they are saying on the sufficient cause being or some provision they say that commissioner has the power. By way of order they issue that. Notification means what? Council is meeting, then by notification they are sending the. So in case of job work, within 6 months you should have received, that is from the appointed date, within 6 months you should have received the goods back. Now, if it is received within 6 months, then fine. Not received, then what happens? If it is not received, then what happens? These goods I have sent with stock in hand for job work. If it is stock in hand, what will I do? I will check whether I have any duty paid document. If I have duty paid document, what will I do? I claim the TRAN credit. So, if that stock which I have sent on job work is not come back to me within 6 months of the appointed date, then whatever TRAN credit ITC I have claimed on that stock, I need to reverse it. They are not asking to reverse as it is, only on that stock. If I have not claimed any transitional credit, then no impact. But for that, you need to file a form ITC 04, I think, 04 or 06. So job work is very dangerous, more dangerous in case of jewellery. Because item is small, what is this job work? Many people are thinking, why should I file all this form? See, job work again, under GST, if you are giving raw material inputs, then it has to come back within 1 year. If it doesn't come back within 1 year, then what happens? As on the date of supply, it will become taxable, and then for 1 year you have to pay tax along with interest. And in case of capital goods, it is 3 years. But jewellery people has to follow whenever they are issuing gold bullion to the goldsmith. It is a job work. So they have to issue a delivery challan. Then the delivery challan details should be mentioned in ITC 04. Last date is 31st December 2018 from July to this date. So please ensure that that form is filed. Then only the department will have a tracking of within 365 days it has come or not, whether it is capital goods or inputs, within 3 years it has come or not, and automatically you are trapped and tracked. Yeah.
If I'm sending goods to another state, my own branch in another state, then for some purpose, but that employee is my own employee, then can I treat it as job work or how should I treat it?
Goods belong to whom?
My own goods.
Processing done by whom?
My employee only. But it is
So
a
it-
different state, so distinct person.
So there what will happen? In GST you are asking, correct? Now, distinct person. In case of distinct person, different state. Different state, different GST number, same PAN number. What should you do? IGST has to be paid. That is not a job work first, but since it is an interstate branch transfer, you have to pay IGST on that. And then whatever you do, that is a different thing. Clear? Any other doubt? Now same way in the excise regime, any goods is moved, that is when is tax liability, that is whenever it is removed from the manufacturing area or depot, wherever it is. But certain places you can move without payment of duty, some semi-processing or job work purpose, or your factory is one place, one particular processing is done at another place, you have moved the goods before 30th June to that manufacturing process place, which has to come back again as per the central excise rule within 6 months. So there also they have said that you have 6 months time. If you have moved your goods for the purpose of some manufacturing to your own unit, that has also to be come back within 6 months. So these 3-4 conditions are there: goods returned, and then finished goods removed for carrying out certain process. That's what post GST era. And declaration of details of inputs or goods held in stock by the job worker. Now another one form is there in the TRAN 1. Whatever goods is there with your job worker, that has to be declared in the TRAN 1. Then only they will be able to link that in case within 6 months the goods has not come, then this TRAN credit you are not eligible. So this way the linking has been created. And same way in this you have same goods sent on approval. If goods are sent on approval, same process. Within 6 months it has to be come back. Then the last section is miscellaneous provision. Here most of the things, if you see, it is related to appeal, some certain duties and taxes which is not claimed there, and then you are going on appeal, getting the refund, all those provisions. I will not go much detail on this. This is duty paid goods returned in the post area. Okay, this is very important thing. Duty paid goods returned post GST era. What are they saying? I have made a supply before 30th June. I made a supply before 30th June. It is possible that I may get the purchase return or sales return, whatever it is, after the supply. That is after the appointed date. I have sold the goods 6 months prior to the appointed date. Can you see this? 1/1/2017 to 1/7/2017. Those goods which I have sold from 1/1/2017 to 30th June 2017, I have received back. That is sales return. I have sold and I have received back. That is sales return from me during the period 1/7/2017 to 31st December 2017. Then what has to be done? Here two types. One, goods sold to unregistered or B2C customer. Goods sold to unregistered or B2C customer. Second, goods sold to registered dealer. Now many have done here mistake also. What they have done is, whatever return has come, they have claimed in the transcript. That is wrong. If you have sold the goods to unregistered dealer, then it has returned back. Amazon says, some online sales you are making on mobile phone, it has come back in the, you have made the sale in the VAT regime and now it has come back in the GST regime within 6 months. Then whatever tax is there on that, you cannot adjust or claim input. You have to file a separate refund application with the VAT department or the excise department. If goods is sold to unregistered dealer and that has come back to you after the GST regime within 6 months, then you have to claim separate refund. You cannot claim the input tax. This is B2C or unregistered dealer, subject to the satisfaction of the officer that correct invoice is shown, correct details is shown. Now second condition is where you have sold goods to registered dealers. Where you have sold goods to registered dealer in the pre-GST era and you are returning, that is the sales return is coming back after the GST regime, then what you have to do? It is a deemed supply. That means no debit note, no credit note. Your buyer, that is your customer, will raise a sales invoice on you and you have to treat it as a purchase and then you have to pass it. Here also, I'll tell you, those who have claimed TRAN credit on such kind of goods, they have made a mistake that purchase return or that sales return by debit note or credit note, they have adjusted in the taxes and claimed in the TRAN credit. This area you have to be clear. Any doubt here? Two types, B2C or unregistered. Second is registered. B2C means claim refund. B2B means it will be deemed supply, only valid for 6 months, not more. If it is after 6 months, anyway deemed supply now. And for B2C, you lose the tax. It is to your cost. Price revision in post GST era. Many price revision has been there. So what they said, supplementary invoice. See, concept of supplementary invoice, please note, GST has around 12 documents, I think. 12 to 13 documents. All the documents needs to be filled in the GSTR1. Your inward supply RCM invoice, then your outward supply invoice, then your delivery challan, then your receipt note, that is receipt, then your refund voucher, then your payment voucher, all those things are there. 12 type of vouchers are there and that one is supplementary invoice. Who can issue supplementary invoice? Only 2 types of people can issue supplementary invoice. The concept of supplementary invoice, many people, sir, can I issue supplementary invoice? Debit note or credit note down. Then who can issue supplementary invoice? First supplementary invoice is during the migration. If there is a price revision and I am doing that price revision within 30 days from the appointed date, then I can, whether upward or downward, then I can issue a supplementary invoice. I will not issue debit note, credit note. See the difference between debit note, credit note and supplementary invoice. Now who is another type of dealer who can issue supplementary invoice? 20 lakhs is the turnover limit for registration. Today is, say 29th November, my turnover is crossing 20 lakhs. Now, if I apply for registration today, immediately I will get registration, correct? No. Yeah. So it takes some 1 week to 15 days time. So I become liable to be registered from next day. Today, or if it is crossing today, from today I become liable to be registered. But since I am not registered, what will I issue? Bill of supply. Wherever no tax is there, bill of supply. Wherever tax has to be provided, tax invoice. Tax invoice can be provided only by the registered dealer. Today I am not registered. So what I do? I issue a normal bill. And I do my registration within 30 days. 20 lakhs and within 30 days, if you do your registration, then from the date of you becoming liable, till the date you get the registration, you might have made a sale, you will not stop your sale, correct? You have issued some invoice. Now these invoices are taxable. So what you have to issue? Debit note, credit note or supplementary invoice? That is where condition. See how beautifully they have controlled it. But understanding itself is making many people concept understanding. Now receipt voucher they are asking, correct? In GSTR1 receipt voucher they are asking, have you seen? Serial number. Payment voucher they are asking. Purchase inward supply invoice they are asking. What is that? Receipt voucher for all your receipt voucher. All your payment voucher number are they asking? No. Receipt voucher is for advance receipt voucher. You need to create a separate voucher type for advance receipt voucher. That separate serial number should be there, and that you have to mention in the GSTR1. But many people what they do, whatever receipt received from debtor, creditor, whatever it is, put in the serial number, get caught. Don't give extra information. Give what is required. So receipt voucher is what? What advance you receive, only that voucher number you need to mention. Now for this advance, suppose the work is not completed, what you do? You refund, then refund voucher. No other refund, only this linking. What is that payment voucher? What is payment voucher? Inward supply purchase detail, what is that? RCM. Inward supply invoice is nothing but your RCM invoice. See how they are tracking it. See, it is a wonderful method to track in your accounts. If you follow that, many things can become simple. But we complicate it. Okay. See, since I teach Tally, I can understand, find out very easy for me. What are the RCM purchase I have made? What I do, I create a voucher type, purchase RCM. So I go to the DSS, display statement statistics, I see the purchase RCM, total, percentage, calculate, work is finished. Otherwise what you do? Go to freight inward ledger, somewhere freight outward ledger, somewhere transportation, multiple things, and then waste your time. Now, for this RCM purchase, you are making a payment. That is payment voucher. Understood? So this is the link. See, understand the link and maintain it in your accounts. I'll tell you, lot of your unnecessary time spent on your accounts can be saved. We waste time only in calculation. Expenses again, repairs and maintenance. 18% is also there, 12% is also there, exempted is also there, taxable is also there, nil rated is also there. How do you track? Multiple ledgers will you create? Capital goods, inputs, services, how do you track? I have found some other method. In Tally what I do, I create inventory, 18% input without unit. Then 18% input, 18% services, 18% capital goods. So what I do, I link the ledger to the inventory without maintaining inventory, only the value. So any point of time, I see the inventory ledger, I get the value, I calculate with the percentage, I can know what is my inputs, what is my capital goods inputs, what is my services inputs, any way I can play. Exempted, nil rated, composition. Instead of creating multiple ledgers, I track with what? End of the day, you want report. And DOG is there in Tally. What is DOG? Display statutory report, GSTR. If your data is huge, it takes a lot of time. All your software should be compatible to generate those reports. This way, some system you create, time is precious. Every 10th, GSTR1. Every 20th, TDS irukku, income tax irukku. So no holiday for us. So revision, supplementary invoice, upward, inward within 30 days, that should have been done. The only thing what you need to verify is whether within 30 days that has been done and properly captured in the return, that you need to check. And then pending refund claim will be adjusted only in the existing law, that will not be done in the current laws. So all these are refund finalization proceedings. Now certain cases what happens is, you have filed the input tax ITC in TRAN 1. Later on department is giving some assessment. Maybe some purpose they find out that you are not eligible for that ITC and department has given a notice, then what you have to do? You have to reverse it. That part you need to check if it is there. Then contract and all is there, so these things. Works contract, again they have said that one place where you have fixed rate of tax. Works contract fixed rate of tax. Yes. As on the appointed date, before the appointed date, you have fixed rate of tax, some inputs, semi-finished goods, those things are there. That input tax rate also can be taken. But be careful, only if you are a work contractor, then you can take it. If you are building a hotel for your own self, you cannot claim. Section 17, subsection 5. Goods sent on approval basis, again they say that within 6 months it has to come back. Extended by 2 months by the commissioner. So again TDS already I have explained, if you have claimed in the return and it is in the carry forward, you can claim. If it is not claimed in the return, and then you have to claim separate refund. So in IGST already, as in the case of import, whatever tax is there, that input you can claim. So TDS unclaimed entry tax already I have taken. Invoice more than 1 year, whatever transactional credit is there, if the invoice is more than 1 year, you cannot claim. Then technology issues, okay, this notification. Notification number 48 bar 2018. Now if you see this notification, this was issued on 10th September 2018. If you see the last date of filing the TRAN 1 return was 31st December 2017, correct? Now at that point of time, a lot of technological glitches were there. Now in one case what happened was, we migrated the client tax, service tax number, VAT number, excise number. But excise number was not reflecting in the migration. Now if that number is not reflected in the migration, but in my central excise return I have 10 lakh rupees credit balance, send VAT. So if it is not reflected, what happens? I cannot claim in my TRAN 1. Only when my excise number is reflected in my migration, then only I will be allowed to claim the TRAN 1. So we raised a ticket, tried, went, but it didn't happen, and then date has gone. I said that, I know department, because GST has been quite helpful wherever genuine reasons are there. From the starting we have seen that government has been. So I said, you wait, whenever the opportunity comes, we will see. So now this opportunity has come on 10th September 2018, where they have notified that the commissioner may, on the recommendation of the council, extend the date for submission and submitting the declared electronic form trans 1 by further period not beyond 31st March 2019 in respect of registered person who could not submit the said declaration by the due date on account of technical difficulties on the common portal, and in respect of whom council has made a recommendation for such extension. There are two types of dealers, registered dealers they have mentioned. One, those dealers, if you see that point, that is in respect of whom the council has made a recommendation. One, the dealer should have been recommended by the council. Second type of dealer is who has failed, that is, who has found some technical issue at the time of claiming the TRAN 1. Only for those two categories you can file the TRAN 1 now. Now what happened after this notification? TRAN 1 has been opened. For whom? If you say all the cases, TRAN 1 is not open. One case where there was no technical glitches, client made a call, sir, we have left out few TRAN credit, we need to claim, so please help us. We have opened his login and found out that TRAN 1 window is open for him. He never filed his return TRAN 1 during 31st December, no technical glitches. Okay, lucky, file it. Done. Second case which I said that central excise number has not been migrated, 10 lakhs. Which I opened, thank God, one window has been opened for the client, I am happy. Open, TRAN 1 is not opening. What to do? We went to the department, wrote a letter, said this technical glitches. Now wherever technical glitches are there, either you should have raised a ticket, you had a ticket problem, that is whatever query is there, you might have raised some ticket, if you have the ticket copy, like, or you have to tell that this migration has not been done, because of this I have not been able to claim. So we went to the department, concerned jurisdictional officer, and said that, sir, this is there, so please open us. Sir, only recommendation or high court, those which is there, they only can, that can be opened, it is nothing in my hand. But two things they said, we said, sir, there is a problem, Senvat has not come, but now it has come. After this we checked, and now that even the central excise registration number has also come. We said this is issue, no sir, we cannot do. So now we have to go to the commissioner, take his approval, then only we can claim. So in your case, any case, if TRAN 1 is not there, or not claimed, go to the commissioner. Based on this notification, so last date is 31st March 2019. Now again in this case, 4-5 types of input tax credit I said which you can claim. One, where you don't have duty paid document, or 60/40. There what you need to do, you need to file TRAN 2 form. So for the TRAN 2 form also they have given 30th April 2019 as the date for filing the form. So any doubt till now? You make it technical issue. Some point you find out where you can say because of this, go and meet the customer, the commissioner, or meet the officer. First to open the website and see if you are lucky or unlucky. If TRAN 1 is open, then nowadays department has already asked for documents verification for whatever TRAN 1 they have filed. They are asking full list. What is the stock, what is the purchases invoice, what is the breakup of the stock, rate of the stock, when the stock has been sold, all the details they are asking. With respect to the cases where you have the entry tax, they are comparing with the last year number of vehicles also. How much number of vehicles last year you have purchased, how much you have claimed in your return, how much is the closing stock, then they are comparing the value, and then only they will checking the TRAN credit, and accordingly only they are giving the input tax credit. So documentation is very important. Again, where changes is there it is very important. So this is what I thought that certain issues in TRAN credit, where now department is slowly, nowadays you will see that those who have filed, they are going to get lot of notice for verification. Those still now they are also confused what to do, what not to do. Even this refund, if you go and tell sir refund for export, they are understanding. You tell sir I want to take a refund for inverted structure duty. Sir modalle in the duty purilla inga poringa sir engalukku theriyadu sir. So because they are also learning, in the learning process, inverted structure duties documents are there, so it is taking some time. But overall things are going on, and now at least the return filing process is smooth. Any doubts here? These are the things I thought that some issues in the, once when the topic was given, I was wondering what is this post-mortem work, everything is done, what I will talk. Okay, then I thought let me take the section and then at least take some points where we feel that these issues are there. Or any other doubt or anything you need to have clarification, you can ask. This
What's the
accounting entry, yeah. Pardon? TRAN 1 accounting entry, yeah, sorry. TRAN 1 accounting entry. Now here again 2-3 types are there already, I said. One, you have carry forward input tax credit, correct? What will be the accounting entry? Direct entry. Debit CGST input account, credit the VAT input or central excise input, central excise input or service tax input, or SGST input account to VAT input account. This is one simple entry where if you have a carry forward. Second is you have stock in hand. You have not claimed the ITC. If you have made import, what you do? You have added the duty paid along with the purchases. and that is again reflected in your closing stock, correct? Two things. One, added in your purchases. Second, your closing stock value is increased. I am a VAT dealer, I have a duty paid document, that excise what I have paid is added to my purchase, and then stock, I am an importer, same way. Now in that case what happens, the duty account is not separately, it is added in your purchases. So what entry you will pass? CGST input to purchases, or SGST input to purchases with the working separately you keep it. Now here, when we are doing this 1st July, now whatever transitional credit stock you have in hand, if it is sold before 31st March, then no issue on the valuation of closing stock. If only 50% is sold, or 60% is sold, or 70% is sold, now this 20% of stock what we have, it belongs to what? Pre-GST era. Because of transitional credit, the value of stock has come down. Since by passing the entry automatically this value will not be impacted on your closing stock, separately you need to prepare the valuation and reduce the closing stock value. Then only the profit impact will have correctly in the 2 different years of sale. Understood? So this impact is actually, it becomes your profit is increasing. If it is not sold, settle by closing stock value. If it is sold, again. So next year you need to adjust. Any other doubts, sir? GSTR?
Samples. We are sending some samples to the...
Samples? In GST you are talking? Okay. You are sending sample, whether you can claim ITC or whether you have to charge tax. That is what you are asking, correct? Section 17(5). Goods lost, destroyed, given free of cost. Sample is what? ITC what you need to do? While sending the sample, no tax. You send by delivery challan. But whatever ITC is there, that you need to reverse it. Diwali, dairy, gift you are giving, claiming ITC. Can you claim? Question mark. If section 17(5) I read, then? Yes, sir.
My doubt is, what if one particular unit takes a TRAN credit and it utilizes it for a period of 5-6 months, and it got abruptly closed due to some labor lockout or something, and we have some 5 units across the state, can we able to claim that credit to some other unit?
That cannot be done, sir. There is no option of interstate transfer of your credit, except ISD, where it is only for services, common services, where you can transfer from the head office to the ISD, and then from there you can distribute it. But some places, if you have some stock, interstate stock transfer, if you make a stock transfer, then what happens? IGST you pay it. So that stock transfer is done to the another unit. So by this what happens? Your input is reduced and adjusted against IGST. There you get the stock. There IGST invoice is there. You can claim the input tax. So this we need to check what is the probability. I cannot blindly say that you can do it. Based on the stock conditions, we need to check. Any other doubt? So thank you very much for your patient hearing, and thank you SIRC for giving me this opportunity. Thank you.